This is the secret ingredient. It finally made me profitable and it allowed me to pass some evaluation challenges. So buckle up and let's go. The theory is that you need to look at 3 separate time cycles, not 1 or 2, not just the previous cycle, you need the cycle before that. So this is, let's say, the current quarter. The cycle can be anything. It could be a year, it could be a decade, it could be a month, it could be a quarter, it could be a week, a day, session, 90-minute cycles, 30 or even 10-minute cycles. These are all the time cycles you need to worry about. These are all the time cycles. You can have other time cycles. I couldn't be bothered with them. Pay attention. The secret that has been hidden plainly in front of your eyes is that the previous cycle is only important for one specific thing. That's making projections. Maybe this is your target, or maybe it'll reverse from there, the current cycle. But that's it. The high and low of the previous cycle on its own is irrelevant. It's completely pointless. What is important is the high, the low, and the equilibrium of the cycle before the previous cycle. For instance, the current quarter starting April 2026, NASDAQ was already above the low of the cycle before the previous cycle. For the sake of simplicity, I'm going to be calling it T minus 2, where the cycle T is T equal to now. And this is T minus 1 naturally. Okay, so these are the time cycles. This is the current cycle, which is T equal to now. You see, April 1st, there wasn't much price action. April 2nd, the price went into this buy-side imbalance, or a BISI, which is a bullish fair value gap. Also touched the low from last November, held, and then a few days later, on Friday, it inverted this sell-side imbalance, and we've never looked back since. But this is just one data set. This is not going to teach you much. I'm going to go back in history and show you why this actually matters. And this is the price action for the last couple of quarters has been very difficult to navigate. So it might not make sense to you immediately. However, if you come back to April 2025, when the Trump tariffs hit, on 8th of April, I mean the 7th of April, the NASDAQ, the S&P 500, all indices basically bottomed out and then continued this market maker buy model after this accumulation, manipulation, distribution. If you're not familiar with market maker models yet, none of this will make sense to you, and you need a lot of studying before you can get into time cycles. And well, don't give up just yet, because it's quite rewarding once you actually start making sense of it all. So this is a market maker buy model, but notice that the low formed exactly at the high of 2023. This was the low of 2025. The NASDAQ never looked back since. Okay, these are cherry-picked examples. I can go into granular detail. For instance, this is August 2025. Its low was formed exactly at the high of June 2025 because it's the T minus 2 month. August, July, June. This is the time cycle before the previous time cycle from August, because the month is also a time cycle. Similarly, I could go back all the way back in time, for instance. Let's go to the 1 month chart of the Dow Jones Industrial Average. So let's go back 100 years in time. Oh dear, I really hope the data just shows up. Yeah, okay. This is the Great Depression, starting 1929. See this accumulation, manipulation, distribution, which is clearly a market maker sell model on the monthly time frame. And this was the distribution. Okay. This is a market maker model. However, you need to understand, since it's forming on the monthly time frame, the time cycles involved are also longer. So we start at the start of the decades, 1910, 1920, and we go all the way to 1930. And somewhere here would be 1940, but we don't need to worry about that. Notice that this is the low of the T minus 2 decade. We're looking at time cycles, right? Because this would be the current time cycle if we were in the 30s. This is where the bottom formed on the Dow Jones. And after that, we've never looked back. You get the idea. Notice one more thing. Remember what I said about the previous cycle? The previous cycle is used for making projections. So this is the initial time cycle, 1910 to 1920. The low to high projects all the way to -4. So 4 extensions later, the market topped out in the 1920s and started rolling over. See, the reversal can happen at any time. It doesn't necessarily need to happen exactly at the beginning of a cycle or the ending of a cycle or the middle of a cycle. That you'll have to use your experience and expertise to build your confidence. I'm just giving you examples from the past to prove that this is exactly how the markets operate. It's not about the model that you can execute or not immediately. If you go down to the granular level, again, over here, within here, the T minus 2 yearly levels were being respected. For instance, in 34, the bottom formed around the high of 1932, somewhere over here. You get the idea. But how do we put it into practice as ICT traders? We go down to the 1 minute chart because 90-minute cycles are also a thing. Okay, I need to remove quite a few drawings. See, everything has been divided into 90-minute cycles. This is yesterday's price action on the NASDAQ. Yesterday was a bank holiday. However, we had the NASDAQ book until 1 p.m. So is it possible to trade on bank holidays? Personally, I wouldn't suggest it, but the model works. This is a fair value gap that formed a buy-side imbalance right before 10 a.m. At 10 a.m., the previous cycle is 8:30 to 10 a.m. That's a 90-minute cycle. And the T minus 2 is over here, 7 a.m. to 8:30 a.m. This is the previous cycle, or T minus 1. And this would have been the current time cycle had you been trading at 10 a.m. See, the T minus 2 high had already been reached in the previous cycle, so you just wait initially. And then you use the basic ICT concepts only. You wait for 3 PD arrays to fail or your model to show up. These are intermediate term lows formed inside of this fair value gap. At this point, at 10:03, the candle closed below this buy side imbalance and displaced below this low. Would you trade this? Personally, I don't like it too much. However, at around 10:08, You know that this sell side imbalance is formed with a volume imbalance. So you include this in here. That's your bearish model 2022. This is a balanced price range because there's another buy side imbalance that just got inverted. You can short here with this breaker, place stops 3 PD arrays away. I target the nearest swing point or the low. That's up to you. I would personally recommend aiming for a smaller target because that's more likely to hit. And this is how you can scalp on the 1 minute chart using the T-2 concept. This is what the big traders and content creators are all hiding from you. And if you can backtest this and master this, you'll be wildly profitable. Until next time, I hope you enjoyed this video. Hope you learned something from this. Good luck and good trading. Ciao.